Have you ever just dreamed of a job with, total freedom? No boss, no employees, no customers to deal with. Just you, a laptop, and the markets? It's the huge allure of stock market trading, right? A world that promises this unlimited potential. But what does it really take to succeed? Because as we're about to find out, the answer has almost nothing to do with what you think it's about.
I mean, think about it. In theory, the perks are just incredible. You can literally work from anywhere on the planet as long as you have an internet connection. You're only accountable to yourself, and your success, well, it's a direct result of your own decisions. It's kind of the ultimate entrepreneurial dream. But if it's so great, why isn't everyone rich from it? Well, because of this number, a staggering 92%. 92% of people who try to trade for a living fail. They just lose their money and walk away. Now that is a massive failure rate for the so-called best business in the world. So the real question isn't if people fail, it's why they fail.
Now, understanding this 92% isn't meant to scare you off. Not at all. It's actually the first and most critical step you can take to make sure you don't end up in that group. By really digging into their mistakes, we can build a blueprint for joining that profitable few.
This is the million-dollar question, isn't it? Is it some secret algorithm, a hidden strategy nobody knows about? Maybe they have access to some inside information? The answer is actually so much simpler, and it has almost everything to do with what's going on right between your ears.
Here's the truth. Most traders lose because they have completely the wrong expectations, and they fall into the exact same psychological traps over and over and over again. You see, they focus on finding winning trades instead of, managing their own minds.
This slide just captures the beginner's journey perfectly. I mean, look, on the left, that's the dream. A smooth, straight line of profits. You buy low, profits go up, easy, right? But the reality on the right, that's a chaotic mess of fear and second guessing. Uh-oh, should I enter now? Why did my stop loss get hit? Wait, everyone else is selling? Maybe I should too. This right here is the emotional battlefield where 92% of traders lose the war. And these are the classic mistakes, the greatest hits of the 92%. They don't have a written plan, so every single decision is emotional. They don't manage their risk, so one bad trade can literally wipe them out. They average down on losing trades, turning a small mistake into an absolute catastrophe. They chase tips from social media, and the biggest one of all, they just lack discipline. Be honest with yourself. Do any of these sound a little too familiar?
This quote, this is the key that unlocks the entire thing. Think about it. Everyone knows how to lose weight, right? Eat less, move more. Simple. But actually doing it consistently, that's the hard part. Trading is exactly the same. You can read every book out there, but if you can't control your emotions and execute your plan with discipline, all that knowledge is completely worthless.
So, okay, how do we actually build that emotional discipline? Well, it's not about finding some magic bullet or secret indicator. It's about building a solid, balanced foundation. And that foundation rests on 4 key pillars.
You see, most failing traders spend 99% of their time on just one of these pillars, trading strategies. They're constantly hunting for the perfect entry signal. But professional traders, they know that's only 25% of the entire game. Your psychology, your money management rules, and even your life skills, like how you manage stress and stay healthy, are just as critical to your long-term survival and success.
It all boils down to this. You have to stop acting like a gambler looking for a hot tip and start acting like an entrepreneur building a serious business. A real business has a plan, it manages its finances meticulously, and it operates based on proven processes, not just gut feelings.
Okay, so let's get practical. If you really want to build that business, you need a set of non-negotiable rules. This is your blueprint for moving from that 92% into the profitable 8%.
Your trading plan is your business plan. It's not optional. It starts with the big question, why are you even doing this? Then you define your risk capital, and that's money you can genuinely afford to lose. Next, you need crystal clear rules for when you get in and when you get out. No ambiguity. And finally, you establish a professional routine, just like you would for any other serious job.
And maybe the most important rule of them all is about money management. This table shows the 1% risk rule. It's simple. You never risk more than 1% of your total trading capital on any single trade. If you have 1 lakh, your maximum loss on any given trade is 1,000 rupees. Period.
This isn't a suggestion. It's the one rule that keeps you from blowing up your account and ensures you can survive to trade another day.
This quote tells the painful story of a trader named Santosh. He jumped into a quick, short-term trade, but it immediately went against him. He hit his predefined stop loss, but he didn't sell. He thought, it'll come back. Then it dropped more. So he moved his stop loss. Then it dropped again. Suddenly, he's on Google researching the company's fundamentals to justify holding on. A day trade turned into a swing trade, which then morphed into a painful, long-term investment he never ever wanted. And it all started by breaking one simple rule.
And this slide right here perfectly contrasts the two mindsets. The amateur is obsessed with winning. They hate being wrong. But the professional? They're obsessed with managing risk. They accept small losses as just the cost of doing business. The amateur follows fear and greed. The pro follows a written plan. The amateur tries to fight the market. The pro learns to flow with it.
This brings us to the final, and I think the most important shift you absolutely have to make. You must stop treating the market like a casino and start treating it like the serious business that it is.
And if you think professional trading is about winning every single day, this slide from Goldman Sachs tells a very different story. In 2015, they had 38 losing days. Just let that sink in for a second. The best of the best in the business lost money on 38 different days. They are not perfect, and they don't even try to be.
You see, the secret isn't that Goldman Sachs never loses. It's that on their 212 winning days, they made way more than they lost on their 38 losing days. They are masters of managing risk and cutting their losses quickly. They understand that profitability over a year is just a mathematical equation, not a perfect winning streak.
This is exactly why we have to redefine what a stop loss is. It is not an admission of failure. It is your business's insurance policy against a catastrophic event. It's a planned expense, like paying rent or electricity. And honoring it every single time is the one action that guarantees you'll survive to play another day.
So I'll leave you with this one question. Take a hard look at your habits, your rules, your entire mindset. Are you operating with the discipline and the planning of a business owner, managing risk and following a system? Or are you chasing thrills, hoping for a lucky break, and making decisions based on pure emotion? The answer to that question will determine whether you end up in the 92% or the 8%. The choice is yours.